Well, hello, my friends, and Happy New Year. It's Robert Miner with Dynamic Traders Group with our first YouTube and Twitter video of the year. So it's January 7th, 2024. We're going to take a look at two markets that I know we do a lot of videos about and I know that you're interested in. That's the S&P and gold. I think you're going to find them really interesting. And remember that whatever you learn from these videos, you can apply to any market in any time frame. So they're very educational. They're from a very practical trader's perspective. So if you like what you learn, needless to say, I hope you'll subscribe. Hope you'll tell your friends about it. Hope you'll hit the like button and feel free to leave a comment and ask me a question or whatever. I reply to everybody. Okay, that's it. Let's get started and take a quick look at the gold position. This is the gold weekly chart. And by the way, in some past videos in the last few weeks, we've taken a detailed look at the long-term picture of gold. I'll summarize it right here, and that is off of the last October low. The anticipation, anyway, is that this has been a corrective decline and that eventually the bull trend will continue substantially above last May's high. So our trade strategy is to look to identify whenever gold is in a position to complete a correction, then to either add to our current long position or initiate long positions in gold, whether it's in futures or the ETF or whatever type of contract that you trade. So again, this is gold weekly. I just want to bring to your attention last week on the weekly momentum, gold made a bull reversal from just below the midline. That's usually followed, because it's right around the midline, it's usually just followed by a week or two of sideways to up. So if gold happens to be in a position to complete a correction, given that the weekly momentums did that bull reversal, we want to look to position long or add to long positions. Before we go to the daily, this is gold weekly. The lowest recent weekly close anyway was the week ending December 8th at 2014.50. So as long as gold does not make a weekly close below 2014.50, is that the assumption is the trend will continue bullish to a new high. Now let's go to the daily data. Here's daily, and this is right up through Friday the 5th, January 5th. And coming off of that October low, it's been a series of higher highs and then corrections, and then a new high, correction, high. Where are we at as of the end of last week? Well, let's start at the bottom of the chart. The daily momentum made what we call a dual look back bull reversal from the oversold zone. Typically, that's a pretty reliable momentum cycle position that what we call a daily low is complete. And let me put in a retracement here based on closes. Just a moment. There we go. I paused the recording for a minute. So this is the daily closes. So I wanted to do the retracements based on closes. And to show you that last Wednesday, on January 3rd, the low that was made on daily closes was just right on the 50% retracement based on closes again. I mean, it's spot on almost to the tick. So we had this retracement to the 50% retracement. Now we've had a daily momentum bull reversal. That puts gold in a position to have completed a little minor correction here. Do we enter a trade immediately if it appears that it's complete? No, we want the market to give us an indication that it's complete. So a close above 2073.40 will confirm that this minor correction is complete and the bull trend is going to continue to a new high. And because we're have this sort of stair step of higher highs and higher lows, any time that gold makes a new high, that could be a newsworthy event and bring a lot of buying into the market. That's why we look to enter the trade on a minor correction before a probable breakout. So we're not forecasting anything. We're just saying, as of today, or the end of the day on Friday, is gold was in a position to complete a minor correction, but we want to see a close above 2073.40 to confirm that, and that is the go long signal. You've got the specific trade set up for gold here for the possibility of a continued bullish advance to a new high. And I believe if gold does make a new high, there's a good possibility that it'll become an accelerated advance, maybe even substantially higher. I don't know if that's going to happen. I just know that this is a position that we now have a very specific trade strategy. This is the SPX weekly data coming off of the October low, just a beautiful Elliott Wave advance into the high a couple of weeks ago. So let's look at a couple of time and price factors. A key time factor is that the time range of the advance for the wave A, which was 9 weeks, 100% of that, the 100% alternate time projection was 9 weeks up, was the week ending December 29th, which so far at least has been the high. So as of 2 weeks ago, the S&P was in a position to complete a weekly high. Now there's another time factor here I'm not showing. Let me put that on there. I'm going to measure the range of waves 1 to 2, and I'm going to project that from the wave 3 high. So again, at the end of December, the week ending December 29th, the SPX was in a position where waves 4 and 5 were the same time as 1 and 3, and that's a relationship we see often. So some strong time factors 2 weeks ago to complete a weekly high. This week was the first week that the SPX then closed lower. I think it's the first week it did that since the last October low. So not only did it have a lower weekly close, it's what we call a 3-close bear reversal. So last week, the close was below the closes of the past 3 weeks. That's a pretty strong reversal signal. And we go down to the weekly momentum made a bear reversal the first time since the July high that it made a bear reversal from the overbought zone. So pretty strong setup to signal that a weekly high is complete, and probably more than just a weekly high. Also, the price position of 2 weeks ago was right in the 127 to 162% external retracement of wave 4. It's a pretty broad zone, but it reached that zone. And then we had some other price factors around 48.20, and I've taken some of them off just so we can read the numbers easily. But we're in that key, what I call end of wave 5 price target zone. So price, time, pattern, momentum reversal, all together. So is a weekly high complete? Probably, but again, we do trade strategies. So what we can say is that as of 2 weeks ago, the SPX was in a position to complete a weekly high, and this past week, it gave the initial confirmation by that 3-close reversal, bear reversal, and the weekly momentum bear reversal. This is the daily right up through Friday. And on Friday, the daily made a daily momentum cycle bull reversal from the oversold zone. That's usually followed by 3 to 4 days or so, sideways to up. So is this December 28th high? Is it that wave 5 weekly high? Yeah, it could be. But what we're going to look for is, because the weekly momentum cycle has made its bear reversal from those time and price targets, is the next smaller time frame, daily cycle and bear reversal. That'll be a dual time frame momentum setup, then to confirm that a weekly high is complete. So that's what we're looking for in the days ahead. And that probably won't be made prior to the latter part of next week. That would be around the January 11th or 12th, or even the first couple days of the following week. So we've got a few days before the daily momentum cycle does its bear reversal. But boy, that's going to be the setup to consider that a multi-week, if not multi-month high is complete. Now, I'm not projecting any kind of bear market or crash or anything like that, but if we're a trader and I'm looking to trade those multi-week trends, ideally at least, is that will be a time period when we don't want to be long and we want to consider short trades once that setup is made the latter part of next week or so. So that's what I'm going to be looking for real carefully. And of course, if you subscribe to our DT reports, I'll let you know the day that that setup is made. Well, that's it for today, my friends. If you're interested to be updated 3 times a week, down below you can check out some more information about our DT reports. Or if you want free updates, some other free updates, check out our Traders News. There's no charge for that. Just go to dynamictraders.com, learn all about what we're about and how we can help you. That's it for today. It's Robert Miner, over and out. Everybody take care.